All right, good morning, everyone. It's Ben Buckner and Dan Bossy from Ag Resource Company in Chicago. It is Monday, April 21st, the day after Easter. And it looks like we've got another market kind of similar to late last week where financials are struggling. The ag markets are kind of hanging in there, and I think rightfully so. Dan, do you want to break down what you've seen so far on the first day of the week?
No, I think that's right, Ben. And markets are trying to rally here. It's seasonally still an up period of the year, and so with the chart pattern still looking favorable and some wet weather across the Midwest, I think that's still the case. But I do want to set the stage for maybe some sales looking forward. I think these markets got a couple weeks left of maybe firming prices, but thereafter, I do think we need to be a little careful. Now on the weekend we came out, and this is Jameson Greer. He's the head of USTR. He announced, of course, the 301 activities against China in terms of vessel port taxes. And so thankfully, the United States ag sector got a carve out, if you will, not so much on containers, but at least on bulk trade, corn, soybeans, and wheat. Everything is basically exempt unless you're a Chinese vessel owner and that vessel was made in China. Those vessels, which we estimate to be about 11% or less of the ocean fleet, will not, of course, be able to avoid the tax. But those vessels are pretty busy, at least are expected to be, taking South American grain. Sino-grain would be the big users of those vessels, taking it back and forth from either Brazil or Argentina. So I think this is a really big step forward for American agriculture. Now, containers, whether you're shipping out DGGs or meats or let's say even soybeans, they are still going to have a container fee. Could it be anywhere from $100 to $250 a container? But they're not going to kick in, or all of these taxes don't kick in until after October 14th. The other thing, Ben, which I think we need to be careful of here is the dollar. The U.S. dollar here this morning is at a new low, looking backwards for 3 years. This is the lowest level for the dollar now since March of 2022. When the dollar declines, we of course get commodities that seem to be more speculative in nature, and so I think you'll see some help to commodities as you look forward. Lastly, we'll kind of finish up here. We do have a rather wet weather forecast for the central U.S. Thankfully, Missouri is going to be spared after heavy weekend rain. But as you look at Kansas, Nebraska, Texas, Oklahoma, Louisiana, Iowa, Minnesota, Wisconsin, they're all looking at 2 to 3 inches of rain. This is good for soil moisture restoration, but not good, of course, for seeding progress. We're looking for corn and soybeans today to be about 9 to 11% planted, a little bit above the average for soybeans, right at the average for corn. And then if you look at your map to the right, we see, of course, temperatures which are near to above normal for much of the central U.S. So this will help the growth prospect and germination, if you will. So not a bad forecast. A little less rain would be more favorable, but boy, those people in the plains really need the rain, Ben. So we'll see how this all goes. But I think that really digests where we're at. And in my mind, again, a couple of weeks of maybe firming prices, but I think it's something we probably need to reward longer term as Brazil comes online with their corn. Argentina becomes more aggressive as we look towards the end of June and their tax structure ending, at least favorably for the Argentinian farmer. I don't know if you got any comments, Ben, but that's how I'm seeing it here today.
No, I think it's all great info. Kind of the more stuff that comes out with this trade policy uncertainty, we're kind of sorting it out and thinking that for the U.S., for the next couple of months, it's not totally relevant. I mean, I think a lot of markets are going to be left open to us. China is not, but we weren't expecting to ship a lot of things to China really in 2025 anyway. So I think that price discovery is going to be a function of weather and pretty strong demand nearby. And to your point, yeah, it's wet. Maybe the forecast just isn't threatening enough given it's still late April. So of course we'll be watching weather patterns, but yeah, kind of a continuation of what we saw last week. So to your point, there's some runway to the upside here, but we want to think very, very carefully about managing what we think could be a pretty sizable forward downside risk. So Dan, do you have anything else as we get going on this Monday?
No, I think that's it, Ben. I think we covered it, though. In my mind, I believe there's this decoupling going on between the United States and China. I am not all that optimistic about getting Chinese trade talks anytime soon. So if you look at the Chinese down in the Brazilian market, they're buying for September, October. They're not planning on any trade deal nearby. So if we think about a trade deal, I think it's in the fourth quarter or after at the earliest. And some of me says that maybe it's not until 2026.
Yeah, measured in years, not weeks. So, all right, thank you guys for tuning in. That's all we've got for today. And so we'll be back tomorrow with new insights on the grain and financial market. So thanks for watching.